Hello traders, hello everyone, welcome to our new webinar. It's March 31st. It's going to be the last day for the month in this quarter, so we could see some interesting end of the month flows. As you know, we have seen a pretty strong risk-off mode at the end of last week. So I will walk you through some of the charts. Here we are looking at the US yields versus the S&P 500, which are in blue and black, and then you have in red Japanese yen and gold in green. So you can clearly see that this kind of a relationship shows some recession fear. So money is flowing into the gold. At the same time, Japanese yen is also acting like a safe haven, while we have both US yields and stocks lower at the same time. So normally when that's the case, it means that of course economic activity could get worsened. That's why Fed could preparing themselves to cut the rates further. So this is quite concerning, especially when you still have inflation around 3%. So it's now the question if Fed would be more oriented regarding the economic activity rather than inflation. Okay, so we definitely see a lot of uncertainty. With Powell also expressed these concerns as well regarding tariffs, which are going to move the markets this week. As you know, Trump on Wednesday, they are preparing or they will introduce this tariffs plan, and there were some reports during this weekend that they could introduce a 20% global tariffs on all imports into the United States. So that's something that is very, very concerning. We know that this kind of a tariffs could definitely trigger recessions, and on the other side also higher prices, and this is not good for the markets. And of course we are seeing some serious risk of starting last week. But before we go to the stock market, I want to look at the US yields. Now, last time we discussed about this correction on the US treasuries. We have seen only 3 waves of decline, and so far that's a pretty nice recovery above this upper channel of this drop. So I think that more gains will follow. So US yields could continue to move to the downside, and that's something that I think could trigger more US dollar weakness. We can see that euro dollar was able to stabilize a bit, but not really progressing higher much because of, I believe that traders will just be on the sideline now and wait till Wednesday what will happen. And also you have stocks that can be preventing from euro to go up at this point. Now, looking at the US dollar index, we are still basically sitting above this very important 103 support, but because there will be a volatile week, most likely there will be some fake moves in one of the direction. That's why it's very hard to say that wave 4 has ended here. We could definitely retest this resistance zone around 38.2%. Even 104.50 would be still good for this wave 4, maybe to catch the limited upside and then potential turn lower. So still in the second half of this week, I would assume that the dollar bears could show up. I definitely am bearish the dollar as long we are trading below 105.67. But if really there would be some very strong and big volatile moves on stocks to the downside, even dollar will then stay in this correction for a bit longer, because at some point even dollar could be acting as a safe haven. Now, looking at the euro here, Here nothing has really changed or moved much since last week. We are still in this wave 4, which could be possibly, if I move this wave 3 here, could be even deeper one as a zigzag, or it can be a flat if this swing lows from last week will hold. But I still think that that was a very strong and extended leg, very nice wave 3 in the middle of a higher degree impulse. So I think that this current pullback could find the base around this upper base channel line. So for now, my view for the euro did not change, and I will continue to look with and focus on this wave count as long as we are here trading above 105.30. But if we start breaking this lowest trend line of this base channel here around 106, then of course I may adjust the wave count a bit earlier. But for now it looks like just a consolidation. Even cable here is looking quite good if we consider what's happening on the stock market. We made a very nice progression to the upside after breaking out of this base channel and beyond swing resistance here through 1.2813, and now we are just basically trading sideways. So it looks like a healthy correction, but again, we cannot rule out the potential different shapes of this wave 4. If maybe it will not be a triangle, if we stay sideways, could be even deeper wave 4 with nice support around 1.28. I will be watching this zone very closely. Okay, so if we see a sudden drop into that area, I think that this could be quite attractive region for potential rebound later on, if this is not going to be a triangle, of course. Okay, so I'm tracking what will happen and unfold here in the next few sessions. Technical picture for cable looks to me, it looks quite clear here. Looking at dollar yen, we have seen a pretty nice reversal at the end of last week, but now when looking at the daily chart, keep in mind that we are still trapped in a very big consolidation. But I am aware of potential 78.6% drop, which comes in around 144. So if stocks will be in risk of lows, that's definitely very probable, especially when you have also the US yields moving to the downside. So looking at the 4-hour time frame, notice that we broke out of this corrective channel. Now we are trying to fill this gap. I think it was a Sunday gap here around 149.70. So 150, it's a very important round figure. So watch at this level. I think that as long as we are holding here levels below this previous week highs, I think that there is a risk and a chance that this market will continue lower. And of course, make sure to keep an eye on this. Wait a second. Keep an eye on this correlation between US yields and dollar yen. We can definitely see that it's a very tight one. And don't forget that this bounce on the US yields looks to be in 3 waves away from that March low. So if we consider that this recovery should be fully retraced, meaning that price should move below March levels, then of course this could keep dollar yen also in downtrend here. Now looking at the S&P 500, last week, if you recall, I said that most likely we are in this recovery mode, but we didn't know for sure if this recovery will last. We focused specifically on these levels around 5,850, where we said that we had the previous we have the previous swing lows, and also that was the area where wave C was equal to wave A. And you can see that market made a very strong reversal to the downside. We clearly broke this trend line, so we have to respect what the market is doing and just be prepared on even more weakness here into this wave C, which in my opinion still is headed to break and poised to break this swing support around 5,500, and then potentially we bottom at this fib zone at 5,300 or 100 points plus minus. Looking at the daily chart, here is how our second wave count came into the effect. So we are basically now tracking wave C. As I said, this 5,300 could be the first support. Even deeper support would definitely be these levels from August of 2024 here around 5,100 to 5,000. So this whole second area could be maybe even more attractive and important, especially if you try and if you will try to connect the dots between wave starting point of a wave A, ending point of a wave A, and then project this from end of a wave B, and then you will get a quality level around this zone down here. So for now it looks like that risk off is not over yet, and of course this also has an impact, a bearish impact on cryptos as well, that I will talk about a bit later. But on the flip side, the gold as a reason is moving very nicely to the upside. Okay, but last week we discussed and analyzed this ongoing impulse, and looks like that this impulse could be now in a very late stage, because we have wave 5 that is moving into potential channel, impulsive channel resistance line up there. You have also the 261.8% extensions, which could possibly be the next projected targets for the fifth wave. But what's the most important is that we are in a wave 5, and always when you are able to count 5 waves up and you see fifth waves moving into your targets, it doesn't mean that market must and will turn around. Okay, but what's really important to understand that most likely the market will slow down. We don't know what will happen afterwards, but this kind of a structure just tells you that it's not the best place to look for potential long opportunity. That if you were long, let's say from down here, that maybe it's time to be aggressive on stops, or maybe even book some profits. It's the wave pattern that tells us in which kind of stage of a sentiment the market is currently on, and we definitely see a lot of extreme of optimism up here. So clearly that's something that we should consider, that maybe there will be a new pause for gold. So if suddenly, let's say that gold will turn back below 3,000, then I think that we will start seeing some signals that we are stepping into this black wave for consolidation, which in my opinion will still show up this year. Looking at silver, it's also notice that it's not performing that well. It's also still trapped in this consolidation. I think it can be still a triangle. If we suddenly see some sell-offs here down to $31 or $32, that could be quite interesting support for this final wave E of this wave 4 triangle that I'm tracking. If we break obviously above 35, then we know the triangle is already finished here. So as long as this resistance holds, maybe still on silver there can be some interesting opportunities if we get in the meantime this retracement here. Now looking at crude oil, it's basically still sideways here, holding the supports. Here I'm looking at continuation charts, but if you will do the contract adjustments, you will see also maybe even better looking triangle here. Okay, but still it's an ongoing pattern that suggests that crude oil will weaken this year, but looks like that we can be stepping now into this wave E, which obviously could reach higher prices than around $73, 74. That would be ideal resistance. So I think that crude oil now, maybe it's time for some confusions in the short-term charts, but if we see higher resistance levels, I think that will be the perfect timing to be aware that this market is going to complete this very big range, and then later this year I would anticipate much more of the weakness here. Now this one is also interesting, dollar NOK, and the reason why I'm looking at it is because whenever I'm trying to analyze the markets and maybe look for some potential setups, for me the most important is that we try to focus on the clear wave structure. And what was clear on this price chart for me is that here we had a very nice and beautiful triangle, then we had the final thrust out of a triangle, which we know that usually will complete the higher degree structure, and that's even more fascinating when you have this reversal acting very aggressively. Okay, and I see very strong, very sharp drop, which clearly looks like an impulse, and impulses are 5 waves. Okay, and if you try to count subwaves here, then I'm quite certain that you are not seeing this kind of a price action yet that would be in these 5 waves. Okay, so I think that we are missing here a few subwaves that will try to complete this trend. So I think that current trend line, which is extended line from a previous triangle, is now just trying to put in some corrective price action, and I think that this could be a wave 4. Maybe it's a small wave 4 for a triangle, and we will see final push to the downside, or suddenly if we see a bit of more upside, I think that the very nice resistance could be around 10.70 area. Okay, so from there, if we suddenly see this level retested, I think that that could be quite interesting for a potential sell-off. The reason why I'm also bringing on this pair is because NOK has been doing quite well recently, especially if you consider what other commodity currencies have done. So I think that this one could really see a break to the downside as soon as others will try to stabilize just for a bit. Also, now in the risk off environment, of course, what you have to keep an eye is also on some of the yen crosses. We are basically not breaking any kind of real important supports yet, but what's the most important here when I look at different yen crosses is that moves from August of 2024 lows were in 3 waves. Okay, so these were corrections. Of course, sometimes this 3-wave movement will become much more complex correction, but still at some point market should make a move beyond these levels. Okay, so I'm anticipating that this weakness will resume, and possibly we are going to see this breakdown soon, especially if stocks would really continue much lower into this ongoing wave C, as I showed you earlier. Here's also New Zealand versus Japanese yen. It's holding some supports after retesting this trend line here a few weeks back, but notice that that's a pretty aggressive bearish pattern, not only from an Elliott wave perspective, but even head and shoulders is pointing for potential strong weakness, especially if this is going to be broken around 83, then I think that much more downside will follow here. Now looking at cryptocurrencies, basically cryptos are still holding this very important support when looking here at Bitcoin futures, but I just think that we should be aware of potential further consolidation or more weakness. Okay, simply put, because market there is positioned for a risk off, and if we see some sharp moves and continuation lower after Wednesday, then I think that even Bitcoin itself will possibly move into a much deeper consolidation. Then in such case, I think that there is a chance basically that this is going to be a bearish triangle, and that we should focus then on much lower prices. So for now, looking at Bitcoin, I'm quite on the short term, we are basically in some neutral zone here, but I am trying to lean more towards and anticipate maybe more weakness, especially if we will be able to recognize and count all of the needed A, B, C, D, E legs here within this wave B. If suddenly market will make a very strong rebound, let's say by the end of the week, back towards 94,000, then of course bulls are still and back in the game. But what I see so forth, I just don't think we are close to this scenario. Also, if you look at the Ethereum, it's looking like it's unfolding a bearish impulse here, and even this bearish impulse, in my opinion, should continue maybe to even towards these levels from 2023. We got a few retests of these support levels around, that was 1,500 or so. So I think that this could be quite attractive, interesting next potential support. Also, if you look at Coinbase, since it has something to do with cryptos, obviously, even this one is now making potential new 5-wave drop and reversal from that highs. So it doesn't look good. Of course, the only thing that can be promising maybe for the near future is that after every 5 waves, market could stabilize at least for a 3-wave bounce. But overall, I just think that much more weakness is the structure is showing that there will be much more weakness, and that we are stepping into a corrective territory. Looking at check my list here. at nvidia, we are here in pre-market right now, trading around to 105. The markets will open in around 10 minutes. So basically we are going to clear this out, this low out from March 12th. But then the next support is around to 100. That should be a very big important level. If this is really going to be a triangle, then obviously that's the level where we should rebound and potentially complete this subwave C. But overall, I just think that it's not the wave structure where I would see any kind of opportunities. It just shows us that we are in the middle of this consolidation, which could be a triangle or maybe even something else. But definitely it's the period of a pause within a higher degree uptrend. Looking at Microsoft here, Microsoft also, it's making this fifth wave to the downside, could be in wave C of this free wave drop. So very nice, some support could be kept here around 360 level. Which was also the swing high back from July. So I think that this could be quite interesting, but again, it's not necessarily that market will make an impulsive move to the upside, but at least some temporary rebound I would expect from that levels, especially because we could be in late stages of this 5-wave drop that is currently unfolding. Looking at PayPal also doesn't look good. Looks like that it's going to see much more weakness. Notice that we are now already at the lower trend line of this corrective channel, while we had the previous only 3-wave rise with these extensions in wave C. And if you look closely here, I'm sure that you were able to count 5 waves down from that highs. So again, after a rebound, you just should be aware and prepared on more weakness. Here, looking at semiconductors in the short term at least, we are expecting more weakness. That was wave A. If that was wave B, then wave C should move beyond wave A levels. And even if you try to count 5 waves here, 5 subwaves, looks like that obviously we are missing this final 5th wave. Maybe will unfold already in the next few days, but certainly some lower supports should be retested first before we may even consider some stabilization. Looking at also at Tesla, where it is, okay. Tesla basically made a very strong drop. As you know, everyone is trying to short Tesla, especially those who don't agree with Elon Musk. And what we have seen recently is that market basically came to the downside. It filled this gap from October 2024 when we got these earnings released, and since then, as you know, market has made a very nice and strong push to the upside. But then when Trump took office, cryptocurrencies and each other market turned to the downside. So Tesla has made a very similar cycle here, and what we are seeing is that market recently slowed down at the 38.2%, also at this trend line resistance. So I'm afraid that there will be more weakness, and as soon as we will have this 5th wave playing out, this will be indication that very important top here is in place for Tesla, and that this correction will obviously take much longer to unfold. But of course, you will get some kind of a rebound for a wave B rally in the meantime. Okay, traders, that was a short webinar because my kids are alone at home. So hope you enjoyed the content. If you are interested in more of these analysis, make sure to visit us at wavetraders.com, or just simply check some of the free resources here that we also post through the week. So traders, hope that you enjoyed this content. Be careful this week. It's going to be very volatile, and hopefully we get, at least towards the end of the week, some optimism out when all of this what Trump will announce will be behind. Traders, good luck and talk to you soon. Bye.